This is the new year. You started with the new year. You have your new year resolution. You might want to go to that gym you always want to sign up. You want to do something for your personal development. But when it comes to your business, there are some things that you might want to do as well. Your small business may be ready for scaling. Your small business may be ready to take on new challenges. You might want to grow. You might want to expand, but there are some economic hurdles in the way that doesn't let you do that. So today I thought we'll talk about small business lending a little bit and have some information about that out there so you can have a more educated decision. I know it has been a very tricky landscape to navigate. It has been more tricky than ever because you have new products, new ways of lending for small businesses been out there. So I think that some small business owners might be confused or want some answers about what they are, what are the needs for them, when can I take them, how can I apply for them, how can I choose the best lender or the lending product. So we're going to start off by going through recession and inflation, things that we talked about before. Second is lending the right option for you? Third is what type of lending product is best for you depending on your use case. And in the future videos, we'll talk about what are underwriters looking for, how can you be better ready for small business lending, and when you're applying for a loan, what you need to do to make sure that you get the lowest rate, highest amount qualified, and the best payback option. Let's jump into it. Now, first question, economic landscape. I know there's a lot of questions about inflation. I see that a lot of small business owners have dealt with that. Hopefully you adjusted with it, meaning as your cost of operation, as your cost of goods sold, as your cost of revenue goes up, you adjusted your price and you're not in a deficit and the business is stable. So assuming that, if not, you can look at the video I made about how to survive recessionary times. Again, this is a very generalized topic. Each industry, each business type is different. You're the expert in your industry. So always use your best judgment, use your training, use your experience to cater that to your specific needs. Now for 2023, especially as Fed is starting to rise with every meeting 75 basis points to the interest rates, there is a concern with recession. Again, I want to dive into it a little bit, give my personal opinion, again, for what it's worth, but generally there's a lot of research that needs to go into that. So cost of capital has gone up. It means that the money is going to cost more. Therefore, capital is going to be more scarce. Economic activity is going to be lower, especially as you've seen in tech. There is a reason that there are a lot of layoffs might be happening. There's a lot of restructuring because the unlimited growth mindset that was in 2021 and partly in 2022 is coming to an end. And with cost of capital increasing, ideas will be scrutinized more, operations will be scrutinized more. There will be more initiatives for stabilizing operations, keeping cash flow positive, making sure your business survives, as opposed to more of those unlimited revenue mindset. Growth, hiring, expansion. That might be something when it comes to large enterprise or even medium enterprise is a topic of discussion. But when it comes to small businesses, we know that we are more susceptible to economic changes, so that might affect us. One thing that you want to make sure when you strategize is that scrutinize your future plans, especially if it involves expansion or some of those ambitious plans that you have for growth, and think about it, because that capital that you're rerouting to those initiatives is going to cost more, and you want to ensure that if you're facing high inflation and more permanent reduction in your monthly revenue as a result of consumers changing their spending habits and potentially you losing some of that revenue, you are okay financially. The business is sustainable in its worst case scenario. As we always say, hope for the best, prepare for the worst. And it also means the capital that you have, the capital that you're wanting to acquire is going to be costing more, is going to be more scarce. Therefore, just be careful when you're doing expansion plans. Maybe make sure that your business can survive the next year or two first, and then think about expansion. Now, enough about economic landscape. There's no answer for that. We can't really answer where the economy is going. We know that what the Fed's mission is when it comes to raising these rates. We know that large enterprises behaving in a way to ensure that their share prices are protected. But when it comes to small business, you want to make sure you are protected as well. Now, let's talk about lending options. If you're looking to expand, if you're looking to change things, like you want to add trade fixtures, if you want to renovate your commercial space, if you want to buy more inventory, if you want to do something that has to do with either opening a new location, moving new location, something that costs a lot of money. If you can't delay it to next year, if you can't make a case for that, or is that you have to do it. Sometimes we call proactive and reactive approaches. Proactive is all that good stuff, right? I want to expand, I want to franchise, I want to open a new location, I want to open a patio, I want to buy a food truck, I want to buy this equipment for my practice. Versus reactive, which is I need to make payroll this month, I need to pay for labor, I need to use to help boost my cash flow. And usually when it comes to your business, you want to be on the proactive side, but sometimes you have no choice. Again, if you answer that question that yes, I do need to spend capital for this initiative, then there's another question that comes in. Are you willing to use the liquidity, the cash that you have in hand, or you think it's a better option to use lending? Now, that's a really hard question and it's just hard to give an answer to, but here are some pointers to think about. Number one is that how much keeping your capital is going to be worth it for you. For example, if you really need that cash, you think that you have a reduction in revenue, you think that you have adjusted well to raising prices as a result of inflation, you think that your business is not in a stable place, you want to keep that cash, you want to keep that capital in your bank account, you want to have it in liquid assets, you want to have it in a way that you can spend, and sometimes if needs be, fill in those gaps without putting some of your own money, which I know some business owners do. But if you think that that capital can be better spent in an initiative, especially if it's proactive, that's going to increase your revenue, that's going to give you a better cushion, you can always spend that. Again, if you decide that small business lending is a better option for you, meaning that you need something that helps you keep the same or improve your cash flow, have more capital in your bank account, and you really believe in where that money is being spent on. For example, if you're using this money for opening a new location or expanding your current location, and you think that the revenue increases 20%, 30%, it's proven concept, more customers are going to come in, you're dealing with more customers than before, the business is booming and you need that expansion, that's worth it, as opposed to using lending for some of those initiatives that you really don't think that they'll have a good return. Again, there's always a risk-benefit analysis that you have to do, and that is this initiative worth spending money on, and is this initiative worth spending my own money on it versus borrowing? So these are good questions to ask, and business owners ask themselves this question all the time. But let's say that you decide go with lending options. What are some of the lending options available? So number one, I like to talk about SBA loans. We won't spend a lot of time on it. SBA loans is usually really good when you're having an idea that you want to start your business, especially if it's a high capex business. We don't want to talk about drop shipping or selling courses online, none of that. We're mostly focused on brick and mortar restaurants, retail stores, veterinary practices, bridal stores, mom and pop shops, B2B services, those kind of businesses. They usually come in with a lot of capital expenditure, meaning that upfront money that you have to spend. So usually SBA is a really good vehicle for that. Those are guaranteed by SBA, Small Business Administration. So there are more regulation on that, ensure that small businesses are protected, and usually there's a longer term repayment, more flexible. I don't want to give you any rates, but I think that a couple of weeks ago I heard that the rate was around like 9%. So the cost of that capital is still high too, but it's a good option if you're starting your business, not a lot of revenue. That's a good vehicle for you to go to. The next one is, let's say you have established business and you are caring a lot about your cash flow. Now, when it comes to small business lending, you have to make that decision yourself. What do you want? Are you looking for cash flow help? Does cash flow matter a lot to you, or does pricing matter a lot to you? What I mean is, if you're taking a small business loan, you're getting a ton of capital upfront and you have to repay it. Now, in this repayment, do you care that your monthly payments are in a way that work for you, versus do you really care to get the cheapest option so you don't have to pay a lot of money back when you're borrowing? That's a really important question, and that's a question that you want to answer. That's question number one. Question number two is that how long do you want to pay that back? Are you really looking for short-term options, which is usually amortized in 12 months or less, versus more longer term? And there's pros and cons for each. Shorter term means heavier on your cash flow. You have to have a more rigorous repayment, versus longer term, which is more flexible repayment. Monthly payments are usually better. But again, there's another side of that, is that if there are interest-bearing lending vehicles or lending options, you are getting paid interest. But again, if you're already comfortable with your amortization schedule and you know how much interest you're paying, you know how much your monthly payment is, you know exactly when you'll pay it off, and you're comfortable with that, which is usually what term loans are. Term loans are more flexible. Term loans are more cash flow friendly, and they're usually longer than 12 months, 12, 24, 48, which is usually good. It gives you a cushion, but you carry that debt for a long time. If you really care about your balance sheet, you want to consider that. Versus short-term options, which is short-term loans, merchant cash advances, which are being very popular these days. They are a different type of lending. Term loans focus more on longer repayment, and usually they can be cheaper. Those are more focused on helping you use alternative lending, meaning if you don't want to go through, or you can't go through getting a term loan, SBA loan, or more of a traditional lending options, and I'll include line of credits to that as well. Merchant cash advances are a good option if you need capital fast. It's very seamless. The underwriting process is much easier, but also they're very expensive. Usually the APRs are in like 30% or plus sometimes, as opposed to a term loan that is much lower, for the opportunity for you to have cash anytime that you want. So there's more convenience, a little bit less strenuous on your credit, on your business, but also the payoff is that you pay a lot of costs. And sometimes the repayment is very rigorous, so you end up having to sacrifice cash flow and pay a high cost for it. So watch out for that when you're making a decision. MCAs are very fast to get, very easy to get. It's easy money, but it comes with very high cost. So you want to consider that. Just sit down, do some analysis, make sure that when you're looking to get lending, choose an option that works for you. I don't know what would be the best for you. It's up to you, your business, your priorities that we discussed. Last but not least, be careful about your use case versus the use case of the lending product you're getting. A lot of product managers in that area want to transform their lending products to match all use cases. Meaning, for example, a commercial line of credit was a line of credit, essentially like a business credit card. You have access to this line of credit. It's a good peace of mind for you. You went through underwriting. Whenever you want, you can take some and then you pay interest on it. There's a repayment, but now they're being transformed for business owners to use them as term loans, essentially. So I can get maximum amount that I can from this line of credit, but there's fixed repayments, there's fixed amortization, and the repayment schedule looks like a term loan. Again, if you're comfortable with that, go for it, but exactly know what is the use case that you want out of it. Try not to use MCAs and lines of credits as term loans, meaning you want more flexibility, you want more repayment, and you talk to these lenders and usually they can't do that for you and it causes a lot of frustration. If you want longer term payback, term loans, even SBA loan is a better option for you as opposed to these line of credit, MCAs, which are more short term and they might not serve the purpose that you need. For example, if you have a merchant cash advance or a line of credit that sets you up for a repayment of 3 months, 4 months, well, that might not be enough time for you. You need that cash to get into your business to do what you want it to do. And again, you want that return to be more visible. So the 3-month repayment timeline doesn't give you that option. So just be careful. I know it might be very exciting when you open your portal, if you open your email and you click and get money, but make sure that lending vehicle works for you. It's worth spending some time on. And at the end, make sure you have post-funding plans for your money. Where is the capital going? How are you planning to do repayment? Are you comfortable with that? When it's all said and done, will you achieve what you want to achieve? These are all the things you want to think about, and hopefully with that capital, you'll improve your business and make it more successful than ever. And the last thing I want to talk about is there are more lending options than ever out there for small businesses. Some are really good, some are not so good. We know that. So it's up to you. Again, everybody's trying to sell you their lending product and the new shiny thing, whether it's an MCA, whether it's a line of credit that treats it like a term loan, whether it's a future any new lending option, just be aware of that. Ask a lot of questions. And we discussed that before. What is the total cost of the loan? What is the monthly repayment? Is it fixed? What is the default proceeding? How much flexibility do I have? How does the repayment work? If there's any issue, can I talk to someone? Do you have a portal? All the things like that to make sure that when you're using a lending option, you're not just jumping in and not knowing the full story. Thank you so much for watching. I thought this was a good time to talk about lending in general terms. As New Year's come in and you hopefully have your 2023 planning, you might need capital, you might need money. Now that the companies are more careful than ever, it might be a little bit hard for you to access funding that you need, but also you want to make an educated decision. So hopefully these pointers, and these are general pointers, it's up to you, it's up to your business. You know your business better, you know your industry better. So make the best decision for your business and try to always make sure that you do your research. Unlike before with small business lending, there are so many other options. So it's okay to shop around. It's okay to find the best deal that works for you. So don't shy away from that. You don't have to, like before, go to your bank to get it or say yes to some sort of merchant cash advance that might not work for you. Put them all next to each other and see what works for you. See what your goals are, see how that lending vehicle that can help you, does it work for your purposes? If yes, go for it. The only other video that I can recommend for you is the last video I made on how to navigate through recessionary times. What are some of the industry best practices and action that you can take for your small business to make sure that they're successful or they weather the storm. If you sense that there might be a permanent reduction in your revenue, you can watch it here. But thank you so much. Have a great holiday season and keep learning.